Good evening. October 7, 2014, the markets have just closed. My name is Fausto Botelho and I'm from São Paulo, Brazil. 2 months ago, exactly on last August 5, I made a call stating that, forecasting that the markets would fall 25% in the US. The chart we used was Dow Jones charts. Actually, this beautiful 100-year chart that I'm showing you now. In this chart, which is inflation adjusted, you can see the drop of 1929, the drop from 1966 to 82, the bull market from 82 to 2000, but when the dot-com bubble busted and the market fell 43%. Then it went up again and we had the subprime crisis and the market fell 53%. I mean 55, around 55%. I'm turning this chart back to candles and I'm telling you that the call that I made, the 25 drop call, was made because the market broke what I called as the mother of all resistance. Yeah, take a look at this chart again. This resistance level jumps to our eyes, right? Never in the history of this 100-year chart we've had two tops away 7 years, one from each other, happen in the same exact point, the same exact technical point. Well, the call was made, as I was saying, because we had what we call in technical analysis a bull trap. The market broke this spectacular resistance. I called it the mother of all resistance at that time, and then or else a resistance of biblical proportions, right? And a bull trap, which is when the market breaks one of the resistance and then re-enters the resistance. A bull trap is as more important as the more important is the resistance is dealing with. So I call these, as we're talking, a very spectacular, impressive resistance. I call these indication as the indication of the century. Well, when the market went down, it touched this spectacular as well support line that comes from the drop, the dip of the subprime, and the market touched it for the fifth time. 1, 2, 3, 4, 5. For the fifth time the market touched it, and then it went up. It produced another bull trap in the top that it had produced in December, and then on July 31st it broke the support line. The breaking of this support line enables us technical analysts to think of a action-reaction thinking, in which we empirically know that after a action like this is broken, the reaction brings prices near, the reaction it's proportional for the action, and it's actually Fibonacci proportional to this action. So the minimum reaction that we empirically know that could happen is that the market would come to the first level of the Fibonacci retracement levels, and that would be a 38% drop from this 100% action, and that would mean a percentage drop of 26% of the actual levels. So what I want to tell you is that after my call the markets went up. My fault, I didn't mention that possibility at the time I made the call. But what I want to tell you now is that after a support line is broken, this upward movement, it's very common, and it's even called a simple pullback. So what I think happened with the last rally of the market, and what I think the market is shouting loudly for us today, is that the last rally was just a pullback to the support line, and having the support line offered resistance. This reinforces the thesis that this is the idea that this is just a pullback and the market it's coming down now. Because when a very important resistance level like this one we saw is broken, the last thing the market does before entering a huge bear market is a pullback. So we have the pullback, the market closed today under resistance, and that makes me believe we're heading for huge drops in the next days or the near future. The advice I gave to you, common investor, at that time was to make yourself liquid, because if I'm right, you're gonna be king, because whoever has money when the market, when we go into a crisis, is king. And if I'm wrong, you're gonna lose a few bucks. So what? It's gonna be the price of the insurance you're gonna be making for having the market on its top range of the last 100 years in real terms, inflation adjusted. Now let me quickly show you how am I seeing the markets in terms of the Elliott counting. This is not good. I advise you, this is really not good. Well, I think this is an upward movement, an impulsive movement, where we can count 1, 2, 3, 4, 5 waves. So now we're analyzing the counter trend move. The counter trend move, we know it's made of, actually the cycle, it's 1, 2, 3, 4, 5, and then the counter trend move, it's A, B, C. I think we're here, we're starting the first wave. Actually, I think we are here, we're starting the fifth wave of the wave A. Yeah, we're in the beginning of what's going to be a big bear market, a huge long bear market. And that's because I can easily count 1, 2, 3, 4, 5 waves here that would make this dip of 2002, wave 1. Then it's very clear to me that we have an ABC here that would produce the wave 2. And then 1, 2, 3, 4, 5, wave 3, and ABC, wave 4. So we would be starting wave 5 of the big wave A. Then we would have ABC making wave B, and then 1, 2, 3, 4, 5 for wave C. For those of you skeptic about the possibility for it to happen, read my lips. This can't happen. And I'll show you why. And I'll show you something that just for a reminder of what can happen, what just happened to the third world economy. I'm going to grab here on my indicators, it's already there, the chart for the Nikkei, which is the Japanese stock index. And where here we can see a bull market from the 70s, actually from 1970 to 1990, that's a 20-year bull market. And then in my counting, it's 1, 2, 3, 4, 5 produced wave A. I think we have an ABC here, and I think we're starting wave C in Japan, while in the US we'll be a few years below. Well, if you think Japan finished its bear market here, and that somehow A, B, and C, well, anyway, it would have been taken. It would have taken 19 years from 1990 to 2009 for this bear market to happen, to finish. 19 years of bear market, while we are on 14, considering that the bear market in the US started in 2000. So that's what I had to say. If you liked the chart that I showed you of the Dow Jones, you can buy a beautiful poster of this chart to hang it in your wall, and that can be done on our site marketposters.com.